Forex Focus brought to you by IG. Our Forex prices predicting recession. Definitely seeing some crazy, crazy extremes and some crazy, crazy coincidences. And you might say, Frank, what does Euro Yen have to do with the stock market and a potential recession and stock market crash? Well, maybe not directly does it have anything to do, but let me first show you a couple of coincidences and then see if there is anything that's really there or if they're just uncorrelated coincidences. Because one thing that's really, really nice about trading Forex is relative to the other asset classes like bonds and commodities and everything else, compared to stocks, relatively low correlation to the stock market. So if you have, 80% of your money or whatever percentage invested in the stock market and you're trading Forex on the side or next to that, relatively no correlation day to day, week to week, month to month, year to year. And so while that is a nice piece, you can't help but look at the fact that we saw a price extreme here in Euro Yen, which is a major pair. Doesn't have US dollar in it, but is currently seeing some huge, huge extremes that we haven't seen since 2007, 2008. And this market reverted towards its more average prices away from that price extreme in 2008 as the crash was happening there in 08. We got all the way up to above 160 in 2007 and 2008, have not really been above 150 or 155 until the last couple of weeks of trading. Right now above 156 in Euro Yen. Is it a coincidence? We'll do a little digging here in a second, but first time that we've seen sniffed 160 here in Euro Yen, major pair here in Forex since the financial crisis. You look at dollar yen and we are right back to 150, at least close to that price that we got up to in 2022. Once again, right now trading around 143, but we're back close to those prices. And when was the last time we saw, didn't even actually get up to 150, was in 1998, 99 range, right before the dot-com crash. Another price extreme here in a major Forex market, dollar yen, as we're trading near those highs that we saw in 2022. Once again, and those are highs since 1998. Is this a coincidence, or is there something going on here? Because you look at the fact that not only do those two Forex price extremes that we're currently witnessing, the last time that we saw them correlate to downside that we saw, this is the S&P 500, the downside side that we saw in 2000 and 2001, and also the Euro Yen extreme that we're currently seeing. The last time we saw that extreme, 2008. But also seeing the fact that the stock market saw some downside in 2022, and that's when this Euro Yen got up to the dollar yen got up to this 150, this 20-year price extreme was right near the same time. And what we've seen since then was dollar yen kind of get away from this extreme, and the stock market in the same time bounced back a little bit. So some interesting correlations here in terms of longer term trends. Like I say, Forex and the stock market usually uncorrelated on a day-to-day basis, but a few coincidences here. And so what are we getting at? What's actually happening? Are these just complete coincidences, or is there something going on? And I believe there is maybe not a direct correlation, but I think there's a correlation in there. And from what I can tell from a macroeconomic standpoint, is that we usually see these Forex price extremes occurring when interest rates are really flying around. There's some reason for central banks to be moving interest rates around. And the most current example of that is inflation. And in the past, it's been inflation as well. In the 80s and 90s, we saw these Forex extremes occurring in tandem with inflation being high and central banks raising interest rates, but not in all places, just in some places, and thus freaking out those Forex markets. And so I do believe that there is something to this, that we're seeing high inflation, and thus interest rates are being set off in the upward direction. And when interest rates, for example, go to 5% in the US and stay near 0% in Japan, you get huge price extremes like we're seeing in currencies, because interest rates can set off those Forex prices, but they can also set off stock prices as well. And I think that's why we've seen some turbulence here in the last 12 to 18 months in the stock market, a lot of it being, interest rates higher and harder for companies to borrow money and grow. But the real question will be, will interest rates come down? And some of these extremes that we're seeing in Forex come off of those extremes. Well, historically, we have seen mean reversion in those cases. Interest rates can get up to, 5, 6, 7, can get up to 10%, but inevitably historically have come down to, more normal prices, 2, 3%, or even lower. And they've also gone down to 0% and come higher, mean reverting in that nature. Similar to Forex markets have seen upside extremes, have seen downside extremes, and have come back to more normal prices. Will the stock market witness a little bit of a crash with those extremes subsiding, as they did in, the late 90s, early 2000s, and in the 2008 range? Or, of course, what can happen, and what I think economists and central bankers alike are hoping will happen, is inflation will normalize, interest rates will come lower and normalize around 2 or 3%, and Forex markets will normalize, but the stock market doesn't have to necessarily crash to essentially cause that normalization. But either way, seeing some crazy price extremes here in Forex. And the last time we've seen some of these, especially concerning the yen here, this widening of the gap between Japanese interest rates and US and Euro zone interest rates, huge price extremes in Forex, huge changes in interest rates. We have seen some stock market downside, haven't seen so much of it quite yet. We'll see if Forex and interest rates can normalize without a stock market crash, or if one is necessarily due to see these markets normalize. It's a little bit of chicken egg situation, but we'll see as these markets develop.